Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from GoGold Resources, Inc. Please note you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I am very pleased to welcome Brad Langille, President, CEO, and Director of GoGold Resources, Inc., which trades on the OTCQX Best Market under the symbol GLGDF and on the TSX under the symbol GGD. Welcome, Brad.
Oh, good morning, Matt. Nice to be here. And thank you for the opportunity this morning to present GoGold to your listeners. And I'll get right into the presentation. Now, I would mention just a little bit about forward-looking statements. We will be using some forward-looking phrases here, and I'd like to draw the attention to the listener that, of course, there are many risks in the mining industry, which would be normal risks to GoGold as well. But in our experience, the best way to mitigate these risks are to deal with people who have done this before and who have a track record. And myself and the team in Mexico, we have been in this business now for over 30 years. These are the four companies that I've led. And the current one is GoGold, and it has been for I've been involved with GoGold now for over 12 years. Now, GoGold, one of the most important things in our business, especially at times like this, where the sector is depressed, is that you have a very strong balance sheet. And GoGold does have a strong balance sheet. We have about $99 million US cash in the bank, no debt. We have some large receivables, which we are receiving from the Mexican government on VAT tax refunds that have been coming in over the last year, and we expect some more this year. So our available funds are approximately $119 million US, and again, no debt. We're held heavily by management, directors, insiders, and I myself, as the CEO of the company, I'm the third largest shareholder. We also have a strong institutional support, and on the screen you'll see some of the institutions that are with the company as shareholders, plus many more, and a good base of retail shareholders as well. Now, GoGold, as I mentioned, has been always focused on Mexico. And to give you an idea of what we do and our business model in Mexico, and we are one country focused, we typically do a lot of deals with private families, private individuals in Mexico. Over the years, we've done that. For example, on this screen, Santa Gratuitous would be one of those deals where we acquired a project for $9 million that we thought was underappreciated in the market. We then spent $11 million doing technical work, pre-feasibility study. And then, as we've done before, we've built projects. We've built 4 mines in Mexico, or we've sold projects. In the case of Santa Gratuitous, we sold that to one of the premier majors in the business, Agnico Eagle, and we sold it for $95 million US. So made a great return on that. And in building projects, we have our Parral project, which is we built first in 2013. The first production was June of 2014. And it's a unique project in that it's taking old mine waste and heap leaching it. We've applied new technology to these old mine tailings where we mix them with cement and we heap leach them. And that project has been in production now for 9 years. But the flagship project of the company is our Los Ricos project in Jalisco, near Guadalajara. And that project we acquired in 2000 2019, March. And the project we acquired for about $7.5 million US. It had 26 concessions at that time. Over these last 4+ years, we have been adding concessions. We're up to about 46 now. And we've been very active in drilling and economic studies and advancing the project towards production. Now, on the next slide, you'll see our land position in the Los Ricos project. And there you see Los Ricos North and Los Ricos South. And as I mentioned, we entered there in March of 2019. And we first focused on Los Ricos South, which is, and I'll just put one line here to give you a sense of scale on how large our land package is. That would be 35 kilometers or about 18 miles, the line I just drew there. We started our focus on Los Ricos South with drilling in March 2019. In 2020, we completed the first economic study in Los Ricos South. And then we moved to Los Ricos North, where we carried out a large drill program with 9 drill rigs operating. And we published in the end of 2022 our first resource in Los Ricos North. And just this spring, we completed an economic study. So in resources in the district, we started with 0, and over that period of time, over the last 4+ years, we've taken the measured and indicated resources to 186 million silver equivalent ounces, plus an additional 84 million ounces of inferred. So a great result from about 250,000 meters of drilling that we've completed over the last 4+ years. Now, most recently, we have focused on Los Ricos South, where we've updated the preliminary economic assessment that we had published in 2021. And we updated it because we added an extra concession that was contiguous to the drilling that we had done at that time. So we completed the drilling in Los Ricos South, and not only did we increase the ounces that we had, we greatly increased the confidence in the resource by moving most of the resource into the category of measured and indicated, with only a small portion still in inferred. So this happened with infill drilling and increasing the confidence in the resource. Now, we released that just last month in September, and at the same time, we released that updated economic assessment, preliminary economic assessment. And that preliminary economic assessment is very, very close to a pre-feasibility study. And I would just say the biggest things that separate it from a pre-feasibility are mostly on the geotechnical side. And we are completing our geotechnical work right now with a firm, engineering firm who's well known in the geotechnical world. They're called Golder, and they're out of the United States. And with that geotechnical information, over the coming months, we'll advance this study to a pre-feasibility study. And we hope to be in a position by the first quarter next year to be able to release that pre-feasibility study to the market, and hopefully with a permit in hand to be able to break ground and start construction. Now, just a few highlights of this preliminary economic assessment. After-tax NPV of $458 million, with an after-tax IRR of 37%. 11 years mine life in Los Ricos South, and we'll recover about 88 million silver equivalent ounces over that period of time. Half of that being actual silver ounces, about 47 million, and about 500,000 ounces of gold. Initial capex, 148 million. We start off with an underground mine that we develop with that feeds a 1,750 ton a day mill. And then in year 3, we expand that mill to 4,000 tons a day, and we start a pre-strip on an open pit. About half of the production here will be underground, and about half will be open pit. The expansion will be another $69 million capital, and sustaining capital over the life of the mine, $72 million. So again, going back to GoGold's balance sheet, with almost $100 million US cash in the bank today, we're in a very strong position to get this done. And we will add on a debt component, but that debt component should be relatively easy to acquire with such a strong balance sheet and such a strong project. The project has an all-in sustaining cost projected at just around $9 per silver equivalent ounce. So a very low all-in sustaining cost. An average production of about 8 million ounces a year. And that production, as mentioned, that'll start primarily with underground, and then it'll transition to open pit production, as demonstrated in this slide, but it averaging approximately 8 million ounces of silver equivalent a year at about $9 all-in sustaining costs. And the cash flow will build over those years, and with $148 million in the first year as initial capex, and we should be able to fund in year 3 that expansion out of cash flow. That year we produce about $85 million US of free cash flow and build the expansion. Now, we're very fortunate in the Los Ricos district in that we have a project that, for a relative low amount of cash flow, $148 million to build this scale of project, is very doable. And we've positioned ourselves very well to get that done. And I'll just talk to you a little bit about the study, the drilling, and our confidence in it. As I mentioned before, we're very confident about the quality of the resource. And really, if you look at the mining business and you say, how do you build this all up? You go into a project like we did in 2019, and with basically no drill holes, and we drilled 250,000 meters. And all that data, you have to have very strong technical team that can take that data and build what's called a resource model. And that resource model is the foundation of everything we do here. So we're very, very confident about our resource model, that the drilling is tightly spaced. We've used good, reasonable, if not conservative assumptions, and we've built that resource model. Because when you have that resource model, then you take it on to do the additional engineering, where you start planning. For example, what we have on the slide here in front of you is the underground stopes. Those are the underground mining areas. And this project lends itself very well to bulk mining underground, which is the cheapest and the most productive underground mining. And why we can do that is because what we found of this resource drilling, what we found out of this, our block model of that resource, is that we have very wide stopes, very wide mining areas that range in average 11.1 meters in the new area that we added on last year in what we call the Eagle, that new concession we bought. And in the other area that we had before that, average 8.8 meters. In the underground mining world, those are good widths, and we can use a method called sub-level long-hole mining, which again is very productive and very low cost. So that's where we'll start, and we'll start with underground development in those stoping areas, which, by the way, are very good grade. They average about 400 grams silver equivalent per ton. And you can see here, as we build out the pre-production development that we'll be doing over the next 2 years, that and that includes the first year of mining, that develop those stoping areas or those mining areas underground. And what have we done here that's conservative? We've only allowed 20 meters high in these stopes, which for long hole underground mining may prove to be quite conservative. You know, a lot of those stopes in this mining method would be a lot higher. Now, as we go through the pre-feasibility study here and that additional geotechnical work that will bring this up to pre-feasibility, we may be able to optimize that, and we may be able to improve that, and in fact, reduce the cost of development, the cost of capital development. And we'll see that over the next several months as we advance the study to a higher level study, a pre-feasibility study. Now, we mine this out in the underground in the first 3 years. Starting in year 3, we start what's called a pre-strip to have an open pit. Now, we're already down below the depth where that open pit would go. As you can see in these slides, we actually mine out the underground portion below that open pit before the open pit reaches the underground mine. And another conservative approach we've taken is we've planned to refill all these underground stopes with the tailings or the waste generated from when we process this ore. And we mix that with cement and we pump it back into the mine. And we fill up these voids that we've created, that we've mined out, with this what's called paste backfill. And that's a very good way to do it in an environmental sense, because we're putting the tailings back into the ground. And in a geotechnical safety sense, it adds stability to these underground workings. Again, a very conservative view. Most mines would not be all what's called paste backfill. But we're endeavoring to use best practices here. We're endeavoring to use, and that would be on health and safety, on environmental, on community, on social. And you can see here as I advance these slides, you can see that we advance through the mine plan, and we see the open pit and the underground advancing through to year 11, where we bring on a satellite pit as well. Now, in the underground, we're not going to stop doing exploration. We were doing a lot more exploration before. We were hitting some of the best drill holes I've seen in my mining career. We had holes as much as 55 meters of 2.7 kilos of silver equivalent. But it gets to a point where your investors just want to know what's next. How do we advance this project to a mine? How do we advance this project to a business that's going to generate cash flow? And that's what we're hearing from our investors, and that's why we push forward the economic studies, and so that we could show them what that roadmap to production looked like. But I will point out that in doing that, we also have identified areas that are below our current resources, where we have very strong indication that there's more resources may exist. And we know that because this mine was operated from 1908 to 1929, and from American interests who were in the country at that time. And I've just outlined here with a blue box below our planned underground mining, an area that we knew that they discovered back in 1928. And they saw some of the highest grade and best widths in their underground mine at that point. Unfortunately, with the political situation in Mexico in 1929, they had to leave. So we believe that's still sitting there, and that will be a focus of future exploration to expand the mine once we have it developed and in operation. One other thing I'll touch on is that not only have we been working intensely on Los Ricos South, but we came out at the first of the year, the first of 2023, with a press release, and we said we're going to do these things in 2023. And they were completing the drilling in Los Ricos South, getting PEA updated in Los Ricos South. Also, we said before we would do that, we would complete an economic study on the previously drilled ounces in Los Ricos North. We did that. We released that study in April of this year. And now we are advancing the study in Los Ricos South to a pre-feasibility study. And in the background, we said we're going to apply for a permit, which we actually did last April. And the permit, we're happy with how quickly the environmental authority is addressing our application. They've come back and asked technical questions. They've advertised in the National Gazette in Mexico for 30 days with no comments coming back. They've then sent letters to all the stakeholders, and they were all positive responses. And they asked additional technical questions, which we have submitted, and they're reviewing those. And we're hopeful that we will have a permit in the first quarter of next year for the underground mine. So with that, we'll want to break ground and start building. That's our plan. But I'll just mention to you some of the highlights in Los Ricos North as far as the study up there. In Los Ricos North, the study indicated a very strong after-tax NPV of $413 million US and an IRR of 29%. Also a 13-year mine life and initial capex of $221 million. And all-in sustaining costs, a very important number, under $10. So we've taken those two studies and we stitched them together, and we're trying to show where the company, we see it going more over the long term. If you take the Los Ricos South study and you say after that in Los Ricos North is about 3 years behind, we use the cash flow from Los Ricos South and some debt component, and we put Los Ricos North into production following Los Ricos South by about 3 years. We would then have a pipeline to growth in ounces to between 15 and 17 million silver equivalent ounces produced per year at all-in sustaining costs under $10. And from some research we've done and with some of our analysts, that project, with it being built, all of it being built, Los Ricos South and Los Ricos North, would represent around the fourth largest silver project in the business. And it would generate in excess of, we feel it would generate in excess of 150 million US free cash flow a year. So it would become a very, very substantial project. And GoGold has a clear sight line to be able to build those two projects. And we can become a much more substantial company and a very significant producer in the silver space with organic growth within the Los Ricos district. So I think with that, I'll open up to any questions that the audience might have.
First question, why do you use silver equivalent as a measure?
Yes, well, we use silver equivalent because predominantly by value or by revenue generation, we're a silver company with about 60% of our value being silver. So the most important metal here is silver. And I'll just touch on that as well, and that our project takes the ore and mills it and produces, or it's planned to produce a doré bar, like an actual bar that is silver and gold, and that will be the product that we sell to a final refiner. And that's quite different than silver projects that are generating a concentrate that they sell to a refinery. We'll get paid much more on that doré bar. So we are mostly a silver producer, and we produce it right to a metal bar, which we'll sell to a final refiner. And that bar will be very, very silver rich.
One more question. Key takeaways and any surprises from recent PEA and MRE from Los Ricos South. Any issues?
No, really, no. We're very happy with the outcome from the study in Los Ricos South. We see that there are opportunities, maybe even to further advancing the study through pre-feasibility to get maybe some betterment in the study, maybe some optimization, and we're working through that now. But in general, very, very pleased with the study. I would say the highlights are the very low all-in sustaining costs. It's great revenue, free cash flow generating project.
2 minutes left. Last question. Can you discuss the strong Mexican peso versus the Canadian and US dollar and trends in mining salaries?
Well, yes. I mean, the strong peso is a bit of a negative for us in that we sell our product in US dollars, of course, and we pay some of our expenses in pesos. But really the wage component of our operation, although it's great for the community and will employ a lot of people, represents not nearly the largest portion of our expenses in producing our revenue. So the wages are paid in pesos, but a lot of the other components, for example, in the construction, are really US dollar purchased. So we don't see it as affecting it that much. The strengthening of the peso, certainly I'm not an expert on the why, but certainly there is a feeling in Mexico that a lot of the divide between the East and the West, as far as the West and the East being China, that a lot of the manufacturing might be onshored, and that Mexico is a good jurisdiction for onshoring that manufacturing. So I think that is helping their peso. And we also, Mexico is a very stable. We view it as a very stable country to work in. I myself have been working there over 27 years. It's as far as the workforce, as far as the culture, it's a tremendous country to work in, and we have a lot of comfort working in Mexico.
We might have time for one last one. When was the underground open pit mining permit submitted? When do you expect it to be received? Any other feedback on the mining law in Mexico?
Yeah, I would say that at the moment there definitely is no law against open pits in Mexico, and I do believe that open pit permits will be issued in Mexico in the future. For sure, it represents about 60% of their mining industry. Now, to expedite our permit, today we have asked for an underground permit, which is easier to obtain, and we do not need the open pit permit for another 4.5 years. If an open pit permit was never issued, we would just continue mining to the surface with the underground mine. It'd probably have a better IRR and maybe somewhat reduced NPV. But we don't think that will be what will happen. We think that there will definitely be open pit permits issued in Mexico over the coming years.
And we are out of time. Thank you very much. If there's any other questions, please reach out to the company directly, and we'll be happy to